What's up, people? So today we'll be going over the market from yesterday and today. So lots has happened in the past couple days. So we're gonna start with yesterday because I didn't do that yesterday on my actual page. So I'll start off with just go here. So yesterday, I'm just trading demo right now. Nothing wrong with that. Still pretty good. So yesterday I took two trades. So the first one I took was so at 9:30, we had this because we had just a little news. So we had this wick. So what I was looking for was this to be inversed, and then I target. There's a bunch of equal highs right here. So right here we had equal highs, and then we had equal highs right there. So I was targeting these. These are my targets, but I was also targeting, like the top of the fair value. If we got an inverse down here, like price would want to fill this at least. If it wasn't going to inverse it, it would at least fill it before dropping. So we didn't inverse it, but right here, price, this is my first trade. I wasn't actually at my desk yesterday. I was lifting because I had practice in the morning, but me and my friend, we were trading on our phones. So this was the first trade I took. So price closed above this and then tapped back into the order block, and I just liked seeing the reaction, the displacement down from underneath, well, from like this fair value up and from underneath this low, because we took it out and then we started coming up higher really quickly. So we took it out, come up higher, create an order block, respect the order block, come up. We dropped. I got stopped out, but I got stopped when I was at break even, so it was more like this because price moved away from it, from my target eventually, but then came back down. So the next trade, this was a really good trade, and I'll explain why this trade was really good. So basically we have this higher time frame fair value gap that price wanted to react to, but just look at this from here. So price it reacts from this volume imbalance in this order block, and then as you can see, there's no clean bearish fair value yet, because that's what we want to see inversed if we want to see a move higher. And if we're going to want to see a move above this, closing above this, we're going to need to see a displacement move higher. We can't just like chop all the way up here. I mean, we could, but it's not going to be optimal for a high probability trade entry. So when I saw this clean one fair value gap in this leg, we took this low while ES did not take the low. I'm not going to go back because I'm going to lose my position. But and then the close on this one, as you can see, there's a lot of wicks, but the close right here, we closed above, tap back in. You can get your inverse right down here, the consequent encroachment. You want to put your stop loss here. You can put it just like right here, because price might tap here, but it's not. You have to do it where you feel comfortable and where you think the trade idea is going to go bad. So if we close above here and price comes back down here, and it starts like showing a lot of like it'll just stay around here, and I'm not going to want to be in that trade, because what I'm looking for off this trade, oh my god, how does it do this? What I was looking for this trade was just to target the highs that were part of this, which were these two equal highs, because we had just recently created those, so I knew price was going to take out the equal highs. Price did, and then eventually dropped, and by then, at that point, I was out of the trading day. There was this inverse that played out really well that I took again, just like kind of tape reading, took close above, come down, tap back in, and then hit the high, and this high tapping back into this fair value gap. And then from this fair value gap, we start delivering from it, coming back down here, completely respecting this inverse fair value gap that you could have gotten multiple entries off of yesterday. I had some big drop down, and then we'll go to today's trading. So this is the PM session. So coming into today, I was looking to see like a low be taken out and then get a long. So when I saw this fair value gap, I was like, okay, how long if price is going to close above this fair value gap? I'll target here. There's lots of highs to target. Coming into the day, bias is obviously very crucial, but what's more crucial is getting your model, because if your model's not there, you're not going to take a trade no matter what the bias is. So if I see a model that's no matter the direction, I'm gonna take the model. So this was before market. Oh no, this was right as market opened. We closed above this fair value gap without touching back in here. Went long, and then eventually we take out this high just by a tick. Actually, with this, you'd probably be targeting this because this is the high from this leg, but also this one. So this played out very nicely as well. This was one that I took today, And then there was also this trade, but I didn't take this one. So there's this fair value gap right here. The price closes below, and then we come back in. So you could have just shorted after we closed below that, and then especially after we created this, and then tapped back into this fair value gap, and we kept going lower. Now, I took another trade that I lost. It was when price. So I think so we had this, came down, created this this fair value gap. Price closed above, I entered, and then it kind of just waddled around here, so I exited actually at break even. Not really taking that big of a loss. That one was interesting. Then had this fair value gap because I was like, this could be a power of 3. That didn't actually happen. Price kept going lower. Wasn't really trading at this point. There was this trade that Dodgy took on his live account that looked really good, because as you can see, price was really holding this fair value gap, and most would see this as the fair value gap was filled, as you can see, 1, 2, many times. So when we blast through it, you're going to expect at least like this fair value gap to be filled. Like, so the first thing we do is we go fill that fair value gap, and then we kind of reject back down. And if you take the projections, you'd see that price rejects from the 2 to 2.5 standard deviations right here, and then again rejects perfectly, oh my gosh, perfectly, from the 4 to 4.5 standard deviations. Wow, that's beautiful. If you don't know what I'm saying, is you take on the manipulation, because you see we're creating lower, 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 and then we create this last one, and then after this last one, that's when we get a big move higher. So this you mark out, and you'll always get really accurate standard deviation marks on this one. As you can see, there's that one. That price just rejects from before moving any higher, taps back into that 1 standard deviation perfectly. So that was a good one. There's also this one that I took. So I didn't notice this one because I got on the charts just a little bit later than this actually happened. I think I was on like right around here. So price closes above this fair value gap, comes back in, just wicking it. Remember, most of these just either won't even wick the inverse fair value gap, or just barely wick it. So barely, because we have relative equal highs. So you could have had your stop loss here. You could have longed right here. Stop loss right here. But I wasn't there on time. What I did take was this one. So price closed above here. You could have entered when you reach the consequent encroachment of this fair value gap. Put your stop loss kind of just underneath this fair value gap, because I'm not looking for price to kind of trade any lower, especially down here. You know, if we trade down here, I'd look for just a quick wick. And then price moved a lot higher. There was some other kind of nice ones today, but it's just basically seeing your model, taking your model. So right here we have this fair value gap, I remember. So there's another one right here, is basically we had this small fair value gap, and we had this low. So when this was inversed, I shorted because I was anticipating this order block to hold, you know. So we closed below, entered short off the wick right here, took it out at this because this was a high probability low right here, just because low inside of our fair value gap, along with the fact that we just inversed this fair value gap. I may have changed the delivery right here. Well, actually, maybe right here. Yeah, and then here, but most people were looking, you know, to short right here, because they see this. But what I was looking for is off of this right here. I was looking for this wick to play around, so price took out that wick, the low of the wick, never closed below the consequent encroachment of the actual fair value, of the actual wick, which is a good sign to show its bullishness, and then it hit those highs, tapping back into this fair value gap, yet never closing above. It's also a balanced price range right here. And then we had news right around here, and news made price pretty heavy. This trade just played out, but this one I called. So I was saying, once this, we tapped into this 2-3 times, so it's already getting weak. Usually a fair value gap from the news won't hold that well. So once this got broken and did not take out this data high right here, you can almost bet that you could just kind of full port this, expecting that this to be hit, because we're not going to stall around here. We're going to take this out pretty fast. most of the time, more times than not. And you could have held a runner, and then now price reacted from here, and it's going lower, and you can kind of see what it's going to, because price is always about what it's reacting from. So right now we're delivering from this fair value gap, about to inverse this fair value gap. Once we inverse this fair value gap, then we're even more bearish, and you can see the reaction. And then it also depends on what happens here, because if this gets inversed, then you're most likely going to see this low be taken out, and this low is good because it's the low inside of a fair value gap. So it's kind of a never-ending loop. But now when I hop on the 4-hour chart, actually let me hop on the 1 hour, 30 minute. I'm gonna take off a bunch of this bullshit because we don't need it at the end of the day. I need to do some higher time frame analysis with you guys right now. This was really good standard deviation projection. So let's see. Okay, so hopping on the daily chart. In the daily chart, it is looking like absolute shit, man. Holy fuck. Daily chart looks horrible, bro. I'm just gonna be honest. What the fuck? We're just getting lots of, 4-hour chart looks a lot better, but I mean, still not really the best out there. So we have some reactions from these lows. We still have this 4-hour inverse fair value gap the price was reacting from because you inversed it. Delivering from this fair value gap technically. Gonna look for continuation on moves lower. Yeah, this was my prediction. I just tap back into the constant encroachment of this fair value gap, so I think we already did. So it's gonna be kind of iffy going into the next couple of days. I'm not trading tomorrow at all, so I'm not even waking up to trade, but I actually have to wake up for swim, so yeah. Alright, see you guys.